Hi there, and welcome to this podcast of Retirement One Dividend at a Time. This is our first of what we hope to be many podcasts in the future. I'm George Schneider, the founder and publisher of Retirement One Dividend at a Time, and your host for this podcast. Today, I'm going to be talking about what's going on with the market these days. And I'm going to call this segment Counterbalance. For some investors, the drip, drip, drip of equity compression in the stock market has been disturbing and disquieting this year. In fact, the first 6 months of this year has seen the largest first half drawdown of the S&P 500 in over 50 years. Fortunately, the At portfolio has performed beautifully on all fronts, outperforming the S&P 500 in the capital front as well as the dividend front. The S&P 500 has fallen 4 times as much as the At in portfolio equity value. But dividend investors like us have been comforted by the countervailing payment of a regular stream of dividend payments in addition to dividend increases. This is what provides the counterbalance to a stock portfolio, especially when volatility and stock market anxiety is as high as it is today. You'll see this chart that I put up, I've entitled it 31 Days of Dividends. That's because this dividend chart shows all of the dividend payments that the At portfolio has received in the last 31 days. You'll see that we have a large mix of companies, and again, this is only a small amount for those that paid this past month. We have energy companies, we have oil companies, we have short-term duration bond funds, we have companies like IBM, industrial companies, and communications companies. We have Walgreens Boots, the Walgreens consumer company. We have business development companies. We also have a whole mix of utilities. So what you can see from the chart is that this month alone we have received 4 different increases: a 5.43% increase from Phillips 66, our oil company, 1.56% increase from IBM, and a 15.4% increase from Newtek Business Services. In addition to the regular quarterly and monthly dividends we received from these companies, we received extra dividends from Capital Southwest, $315 extra dividend, a $90 extra dividend from Ares Capital, that's a business development company. Another business development company, Main Street Capital, paid us an extra $75. And another business development company, 6th Street Specialty, gave us 120 extra dividends. This month, the dividends added up to a total of $9,851.28. The At portfolio is giving our subscribers over $106,000 in annual dividends at this present time. Now here's your takeaway from this. Growth investors are concerned about inflation, large increases in interest rates by the Fed, a slowing of consumer spending, and the war in Ukraine. We are concerned about these things as well, but less so as it regards our investments. The steady stream of dividends and increases along the way steel our nerves against a deepening bear market. We know that while we may experience a temporary drawdown in the value of our portfolio, our reliable dividend income buttresses our ability and fuels our ammunition to take advantage of falling stock prices, gaining higher yield and increased income all along the way. What was this segment worth? Well, I call it the What It's Worth score, or WIW. The WI score for this month's dividend income was $9,851 divided by $599, which is the cost of our annual subscription. And that comes out to 16.44. This means that just 1 month of dividends paid for 16.44 years of your subscription cost if you were a subscriber to our investing newsletter. If you find this interesting and would like to change your investing style from growth investing to dividend investing and try to ensure a good amount of dividend income to pay your bills when retirement comes around, or if in your retirement now, please contact me at geoschneider@hotmail.com to request your 2-week free trial of our dividend investing newsletter. No credit card, no obligation whatsoever, just free. I hope you found this podcast enlightening. Please, if you liked it, please click like and please subscribe so that we will be able to build a big subscription base to offer more and more content to you. Thank you very much. Hope to see you soon. Bye-bye.